Hello, everyone. Good morning. Sorry, I just got to deal with something here real quick. There we go. All right. How is everyone doing? Again, sorry for the earlier start this week. Everything should be back to normal next week. All right, where do we sit here? It's about 1 minute before retail sales coming out. We know Home Depot did beat, but was not up pre-market, at least last time I checked. We'll wait for retail sales. Until then, everything but Nvidia. If you didn't see, Nvidia was up huge yesterday. It continues on its little bounce back tear, but I think this is going to roll over. Pretty much it helped prop the market up yesterday. Before retail sales come out, it looks like they should be printing now. Everything was negative, but the least negative was healthcare. Fed watch tool, pretty much no rate hike for September, but the odds of it either November or December are hiking up a little, but still not above 50%. Fear and greed still in greed mode. Let's see where the retail sales numbers came out. Let's see if they're who's posted them first. So let me check the sites. Core retail sales. Ooh, core retail sales stronger than expected. What else do we have? Empire State Manufacturing Index. That was horrible. Retail sales. Yep, retail sales still stronger than expected. So let's see what that does with the market. Let me just double check everything. That's why I'm checking two sites. Yep. Everything. So the retail sales beating forecast and consensus. And that's really export prices down 7.9 versus minus 13%. Import prices down -4, versus down -5. Retail sales year over year. That's a big bump. So let's see what the market's doing. The only other things we have today are business inventories and the housing market index. And then we have Kashkari speaking at 10 Central, and that really wraps it up. Remember, tomorrow we have the FOMC minutes. In terms of earnings, the only thing was Home Depot this morning. All right. All righty. Markets continuing their downward move. By the way, if you didn't see, China did an emergency rate cut overnight. That's one of the reasons the markets were weak already. Let's just take a look. There's the little print from retail sales. Stronger. That could keep the Fed going a bit higher for longer. Although we'll have to see how that plays out. What I'm really watching now, the bullish case, besides any short-term pattern for me, would need it to take out today's highs, the highs from earlier today, essentially overnight highs before the China rate cut. Other than that, the other key area I am paying attention to are Friday's lows in the S&P. That's in the area of the 50. And that would be, we've already chipped away at it once, chipping away at it twice, which is about 44.58. So those are the two key things I'm watching. If we drop below 44.58, the next major target is 44.37, then 44.15. Remember, we have an end of a clear path move at this 44.37 area, and we have a harmonic cluster there. So pay very close attention to that level if we do break the 50. Other than that, and again, unless there's a short-term pattern, so far, this is roughly, we're still weaker right now to where it sits based off all the key closes. So that's also going to be important, because if we close down here today, it's still a long way off. That would be the lowest close since back in around July 11th. So I'm going to be paying very close attention to the close. However, even on a bounce back, you can see, yeah, we've had waning momentum, but it hasn't been able to develop any strength. We had a one-day bounce back on the 7th and then erased. We had yesterday's bounce back, and so far, we may be testing the low range of yesterday, even going into the open. So, very, very key there. Is there any great pattern? This is not a double. If you want to watch something before it's roughly about the same. So 45.15 is the key level. Anything else would be short term, just scalpy if there's any short term plays setting up, but nothing from a larger perspective. NASDAQ acting a little stronger. NASDAQ so the harmonic held yesterday, coming back into the rotation zone and rotating down. The key area I'm watching on the NASDAQ is right around this 15,100. If we break 15,100, that would put us below the 50 again, and then 15,032, 25 to 15,032, then 14,917. That's what's key to the upside. Let's take a look at the NASDAQ. I really needed to start moving back above right around 15,317 unless there's a shorter term pattern. But you see, we're not into a clear path moves or anything. There's lots of stopping points. So I'm going to reiterate what I said yesterday, which is, from my perspective, on any rally, stops have to remain tighter. It's not the thing that you want to give it a lot of room. I mean, I don't want to stop way down here trying to catch something personally, because we're still not building any key momentum higher yet. Now, if we start getting some plays with the tick really improving and we get some good momentum bars, I could give it a little more room, but unless that happens, I would be very conservative. The Dow retesting the lows from the 8th. Remember, that was the lowest print before the snapback, and it actually broke those lows just a little bit ago. So the Dow still, which was holding up a little better in relative terms, but the 50 on there, should the Dow break lower, you see the two key support areas are between about 34.9 and 34.725, with the 50 in the middle being about 34.8. So my two key areas, miners 34.980, then we're looking at 34.9, then 34.8. That just happens to be how the numbers are lining up this morning. If we do break this key support at 34.7, 34.725, it could be a quick trip into an advanced clear path move with an eventual target being 33.970 area. Russell also weak. So Russell approaching yesterday's lows. You see here, is this a double bottom pattern? It's horribly sloppy. I would not trade it as a double bottom because of the sideways move. If you were looking for targets, you could still potentially use it as targets, especially this first one, because we got a major cluster there, about 1948. On a 4-hour basis, you have the 200. You have a harmonics area right there. So that's why I just use that as a key. But the key area for me to break above would be about 1938. 1938. Now, if we do break down, I'm going to extend these down based off this 4-hour pausing bar from yesterday. If we do break the lows, because we are into a clear path move, with another key area being right around here. So 1893 to about 1888 and 1879 would be the targets I would utilize to the downside. The VIX still staying elevated. It hasn't been able to really break below this 1480, 1485 level. It's tried multiple times. I'm going to be watching to see if it starts getting some traction above about 16 again. Other than that, the current range that seems to be very important is about 1480 and resistance being about 1709. So it's starting to set up a little higher range. Start getting more so bearish above 17. The DAX, which is let me take a look here. It's still technically a valid double. Still watching for the DAX to reconnect with 15,690, unless the double triggers. That's the only thing that would put me in the short-term bullish mode. Notes breaking down. Look at this. Look at the last time we were trading down here was back in November, the beginning of last November, November 22. So we're trading into a very key support area, almost down to this 109.10. If we start breaking there, I'm watching for a retest of those November lows. Was that actually technically the end of October lows? Sorry about that. The October lows. Getting very key. There is no double left. There is no double left right now. So that's very key. Did I say hi to... I'm going to say hi to Patrick again. Thank you for tuning in, everyone. Hi, Jacob. Hi, everybody in the background that's not saying anything in the chat. Yields. See here, we had the reaction. I was watching the 4,256 area. We're getting a little minor reaction, but it's really going to be 430 and then possibly taking out the 432. By the way, if we do take those levels out, and I'm not just talking today, here's where the reverse harmonics come in really big. And then the next key level will be 446 on a yield basis, but we have not taken out the highs from last October yet. But if we do, that is very, very key. The potential double off the table. So catching on the rotation zone, rotating up. Now the prior major, we even have pullbacks now. Even a pullback to 416, 415 is just coming into key support. So the yields breaking out the 10-2s, still holding above after hitting the first and second targets on that weekly basis, still holding well above the breakout point. Dollar index, we're getting a slight pause. Remember, I drew the upward channel line here, and I said, what was it, a couple weeks ago? Once we got above that other 62.5, I was watching for a reconnect with the 200, which we did, and we're pausing here. This is major resistance area. Now we could get a pullback here. 102.25 is key support, but if it can break this downward channel, the 200, and really get some momentum on, you could see a continuing resurgence. This channel is pretty strong, and this 200 is pretty strong, though. So would not be surprised to see at least a pause. But paying very close attention to the dollar. Crude pulling back with the potential economic slowdown in China, but still holding above, /slightly above very key support areas. 80.50 is what I'm watching on a closing basis right now. All right, so this is definitely inflationary to pump back up the numbers. Hey, Anissa, thank you for tuning in. Again, if you couldn't catch the beginning, please watch it on demand once this is over. And we're going to have to keep doing this early for the rest of the week. I'm really sorry about that. But I think it's better to have something than nothing, because I need to do prep too. Natural gas pulling back a little, but trying to see if this higher base is holding. Gold, still there's downward pressure. I'm still watching for the reconnection with the 200 there. By the way, the equal weight, the big 5 equal weight, which was pretty much led by NVIDIA yesterday, still in the downward sloping channel. Keeping an eye on that. If you did not, this was yesterday and still up pre-market. I mean, look at this price action, but I'm going to be watching for another rollover in NVIDIA. This is still trading at absurd levels. Holding a very key support shelf, but this rally yesterday, 7% and up again pre-market. Now, on a closing basis, if it closes above 451.72, I have to then watch short-term for a retest of this potentially high area that we set and retested back at the beginning of August. Other than that, spiders, 445.35. Let's see. Yesterday's open, 444.70. So I'll be watching that 444.70 and then about 444. And then I'm bumping this down. We're close enough to this being a pausing bar. Then 441.33. But you have the 50 right in there. And we have yet to fill this gap. So this is trading even lower into a fair amount of support zones. But if this 50 breaks, it will not be good. To the upside, 445.75. And then, let's see, 445.75. Then about 447.30, and then the gap fill to yesterday. 448.09. Above there, 449.40. In the Q world, we're trading 368.25 roughly. 367.25. Major support coming in about 364.75, and then 363.80, then 361.93. Yesterday on any continued rally, if that comes through, I'm just looking. You have a minor significant level about 369.40, and then it would be the gap fill 370.46, and then majors 372. In Tesla world, which broke below the key support and it tried to do a gap fill yesterday, but this is, look at any plays here are definitely rollovers. Major resistance is now turning in about 250. I'm still watching for rollover plays. Minor resistance coming in about 241. And so anywhere on a rally above 241 to 248, we'll be watching for rollover plays there. The next key target area is 226, 225, 226. And then we're looking at 214, 215. Hey, Richard. All right, we already glanced at NVIDIA, which had the big engulfing bar yesterday. But we shall see how much that can follow through. Already talked about that. Let's just go back and take a look. Let's just take a look based off those retail sales. All right, so it's bouncing back after retail sales a bit. Again, going into the open, I'll be paying attention to about 44.82. And you still have a lot of chop coming in here. So there's got a lot of work to do on these shorter term bases unless we get some major momentum bars and we get start getting some stronger tick readings. What else do we have after the close for earnings? NU, Allegiant, not much. And then tomorrow, remember, we got Target tomorrow, TJ Maxx, and Cisco after the close. So that's really about it. If we're going to get some upside price action, I would watch your tick and your tick Q going into the open. It looks like we did retest the most recent is 44.70, and it has held. So that's the short-term line in the sand going into the open right now. But it's really, to get even choppy bullish, I have to get above that 44.82. With that, I'm going to wrap it up for now. Hope everyone has a wonderful trading day, and it's probably start again about 7:25 again tomorrow. See everybody then. Bye for now.